little bit just to make sure if anyone else wants to join, they can jump in and not miss out on anything. But I got the news up here, as you can see. And once again, now we know why the market dumped. I know we're all technical specialists, but usually there's some sort of news driven with dumps like the ones we saw, right? Jackbit, what's up? And I'm happy you're here, brother, honestly. But now we know why. It makes sense. And like I said, I kept looking this morning, and I was like, I couldn't find anything. Like, I know we have this right here, 1238, but from the morning, there was nothing. 8:30, right? There's no news. And I was just like, what is happening? Why is the market tanking like this? And now the news has come out, so they've kind of come. Maybe they're trying to figure out who exactly did it, right? Yeah, exactly. Sweaty spaghetti. Very, very aggressive candlesticks. So, not sure if anybody. Well, actually, I'm pretty sure everybody's looking at Financial Juice. But if you're not, I 100% highly recommend that you check out this. Keep this on your screen. I know there's some Twitter handles people use. I used to use that too, but the problem for me was going on Twitter. It's another form of social media, of course. So it's going to keep serving you something else, and you're going to get distracted, and then you're going to click something else. So I feel like this is way better because it's just giving you news. It's not making you click on anyone else's profile or if some other type of news thing comes up, because our attention spans suck as people. Like we all have some form of like ADHD or something, who knows, where we just kind of like see something and we're like, oh, that's interesting, and we just randomly click it, right? So that's why I've moved to using Financial Juice. But yeah, so now we know right here, and that sucks, because for a good time it looked like we were going to potentially see some sort of a deal being made, or a ceasefire, peace, this, that, and the other thing. But it's the story of our lives right now, is this war. And as traders, it's going to be tricky to trade this, I haven't taken a single trade since yesterday. Well, actually, since last week. I haven't taken a trade. Didn't take a trade yesterday. Didn't take a trade today. And I feel great. I feel great because I'm following my system. I'm following my rules. I'm not losing capital. I'm preserving it. I'm just waiting for what is A+ for me. Yeah, 3 Minute had something. I mean, like, there was a bunch of things that set up. We're going to talk about all that because there is lots to talk about. First things first, though, just want to go back to we will tape read a bit today, of course. Actually, I should probably mark those levels, but I'll do it in a sec. I just want to compare yesterday to today, and I just want to explain something. So yesterday, like usual, I always post like levels that I'm watching and stuff like that. But this is what I was looking at, right? And when we set these levels, and if you know that you're going to short from higher time frame buy side liquidity levels and long from sell side liquidity levels, we can already tell how many points price has to move just to get to that level. And when we're looking for price to move like 500 points or maybe a little less, or today was like, I think it was way over 800, but we'll look at that in a sec too. It's quite obvious that like that's not going to happen, right? Like if you're looking for a short, but the short level is 500 points away, there's a good chance you're not shorting today, even though you might want to. And that can actually help you relieve some pressure off yourself about looking for that trade, because you already know, logically, what are the odds of that happening, right? And if price were to move that fast, like 500 plus points, that makes you kind of scared in a way. I say scared, but that would make you more cautious. That's a better word to use, because if price is just spiking lower, 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 it's like catching a falling knife, right? It's very dangerous. And even though we're, as a reversal trader, that's the specialty. You still have to have some sort of, common sense, right? And then if price is pumping like 500 points, like, do you really want to be standing in front of that freight train trying to short it? It's going to be like picking up pennies in front of a freight train, right? That saying. So yesterday, these were the levels I was looking at. To me, I just felt like this is not possible, potentially. This had a better chance, right? Going for those longs because price was much closer to it. But you can just see Asia and London. And this is another thing to talk about, is just take a look at what the overnight sessions did, because it can give you a clue on what to potentially expect when New York opens, right? Of course, it's hella volatile and unpredictable at times. But at least if you have some sort of plan in place from a higher time, like a higher time frame perspective, using something different, like a narrative maybe, it can help you. So like if I was looking at this and I can see Asia and London were both consolidating like literally dead price action, New York might follow suit, right? And we know that CPI is tomorrow too. And typically when that happens, price action usually kind of turns into a bit stale. So, yesterday just kept watching. And I mentioned something, and I just kind of referred to it as like the Twilight Zone. I didn't want to say no man's land just because of equality and stuff like that, but I feel like it's an outdated term. But I referenced it as the Twilight Zone because if my key levels to take a position are up here and down here, anything in here is technically like hands off, right? Like I shouldn't be touching anything in there. And I call it the Twilight Zone because it's like I said here, right? I think I'm starting to see things that aren't real. Like I'm starting to like get antsy and oh, there's an IVG there and that looks amazing, but like the reality is it's not A+, right? So we gotta really be careful how we react when the market is kind of doing things like this, because it's really easy to have FOMO. So yesterday was a sleeper, and then let's go to today. I mean, actually, before I talk about today, I think that's another thing to mention, just to kind of talk about the about being hands off, is that in the past, I remember forcing those trades, and I mentioned it here, like, I couldn't accept a no trade day. I'm not sure, has anyone else had that feeling before, where it's like you just can't accept like markets moving so aggressively, and I have to, get a piece of that pie, right? I can't accept not being in a trade, like that feeling. It's very, very powerful. I'm not sure if anyone else has had that feeling or not, but I would think you have. But like I said here, in hindsight, it's pure FOMO, right? And we don't want FOMO to take the wheel, because if FOMO takes the wheel, your accounts are cooked. And I'm watching what Matt's doing, of course, Ash Trades, and he's taking trades. I like to watch his analysis because he's the GOAT, right? And he is my mentor as well. So I always like to hear his perspective on things, but he does trade a different model than I do, right? He does trade the unicorn and the CISD model, in tune with IB, and I don't trade that. But it doesn't mean I still can't A, support him, and B, analyze what he's doing, because it's a learning process, right? I'm always going to be learning. It's a student of the game. It never hurts. But once again, I should never abandon my setup because he's taking a setup, or feel FOMO from that. And if you are, then yeah, you got to separate yourself from that. But if you're able to kind of, differentiate between the two, then you're good. So discipline gets paid before profits do. It's a hard thing to develop. It takes time. But once you kind of get a handle on it, it becomes much easier. So today, once again, same thing. Show up to the market, identify the key levels. We got previous day high here. Price was really close to this. Yeah, Bobby, just to talk on what you just said there. You used to, but you're getting better about it. And I think that's that's so valuable is that like we're all a work in progress, right? We're all working every single day to be better than we were the day before, and we want to put those pieces together, kind of like stepping stones, right, to get to the ultimate goal. And that ultimate goal could be very different from one person to the next, of course, right? So it's not just some sort of one size fits all approach. But today, looking at previous daily high, and we could see London low here, daily EQ, Asia low. So these were the levels I was looking for. And honestly, like, I really like this previous daily high level. And unfortunately, it got swept pre-market. And I did zoom out just to show you guys all the other levels that were at play. But the reason why I was like really looking at previous daily high is because if you look at where previous daily high is at 29,743, and then you look at where the next key higher time frame level is located, it's at 3259, right? That is a lot of points. And this is what I was talking about at the start. There's a lot of points for price to move in that direction. And do I really want to stand in front of that freight train trying to catch a short? And who knows when price will move there, right? Because like if price can move like 500 points in an hour, like that's pretty dangerous, right? Similarly, if price were to dump 500 points right away, that's also potentially dangerous, right? We don't want to be catching falling knives. So I already knew this morning that like I mentioned it here somewhere, right? Yeah, if I were to go short today, I'd need 32.59 to get swept, which is 533 points away, right? This means longs are my only option today. And that's kind of why I was referencing that, okay? Now let's just go to the pre-market. Pre-market had the previous daily high swept on NQ. We can see ES also has the H1 buy-side liquidity level being swept. And the thing with these two is you gotta be watching ES if you're trading NQ, and you gotta be watching NQ if you're trading ES because they're correlated. This is one of the best filters you can add to your system, and I mentioned that as well in the thread today, because I watched Matt take a long today, and he so this was through the premium stream on Unicorn University. So he does that twice a week, Tuesday and Thursday. So I was on the stream just watching, listening, and he took a long. Right? He took a long today, and it looked like... he took a short. Excuse me. He took a short. So even though there was a 3-minute short that happened in the morning, look at the time, right? It happens before the market opens, and then right as the market opens, you get that 3-minute setup. And I didn't really like this, even though previous daily highs up here, and like it looked good. We closed below this little gap right here, right? You can see how we closed below this secondary gap, but I just didn't like that the sweep occurred prior to the open. And that's the thing with like New York Open is we're looking for like a Judas, right? And the problem for me was that my key level was previous daily high, and I didn't want it to get swept pre-market. I wanted it to get swept when the New York AM opened to provide that Judas swing, right? And then I could have been looking for a 3-minute setup. So if this had happened after 9:30, this would have definitely aligned more with me, with an A+ setup versus taking this kind of a setup. I just didn't want to risk it, and it's all preference, right? Like some people did take this, and I think, and there's nothing wrong with it. It's just preference, right? I was being a little extra picky. And the other thing too is like I really didn't want to force the short because I had already accepted that there's a better chance for me to go long than to go short because of the levels of interest, like London low, daily EQ, Asia low, they were still below, and we know those are very, very valuable levels. So watch that short, and in that process, then when the market opened, then Matt, I noticed, took a short, and he played off of a 5-minute CISD right here, right? So the CISD would be this level right here, right where his entry is. And let's go back to the idea of using ES to figure out the correlation concept, because it's so important to understand where the draw on liquidity is located. Now, when we're looking at this, if I go back to where ES was located at the time, it hadn't swept previous daily high. So to me, going short on NQ, even though you can see that there's a discrepancy, right? There's a potential cracking correlation, you could say, because NQ has swept previous daily high, ES hasn't. Maybe ES is going to front run, sweeping it and roll over. I personally don't like playing discrepancies or divergence in that way, even though other people do. For me personally, I don't like that type of divergence. If I'm trading NQ, I want it to sweep. If it doesn't sweep, I'm not front running the entry because ES swept that key level. So when I'm watching this, I saw Matt take that short, and I was like, oh man, it's good to kind of compare notes if you're able to, right? If you're able to differentiate the FOMO from what you actually do. And I immediately just was like, I personally wouldn't take a short at this point because I would want to see ES at least sweep previous daily high. I want to see correlation, right? So of course, that position gets wrecked in the next candlestick. And why? Because ES was reaching for previous daily high, and it ultimately did sweep it. Now, the next thing to talk about was I was trying to figure out, like, okay, if the price goes higher, like, how can I better put myself in a higher probability situation? So as I'm watching these levels, you notice that London low is above the daily EQ, right? But if I'm looking for a long, which is sell side liquidity, I want that to be on the right side of premium discount. So I had mentioned that, like, I think I might want to see NQ move higher first, because when it moves higher and creates a new high of day, what it will do is it will move the daily EQ, which is dynamic, higher. And I wanted it to move up so that it would be above the London low, because then what happens now is that the London low is inside of a discount. And if price were to sweep both those levels, that is like perfect confluence, because now it's not just London low being swept, it's London low being swept at the daily EQ. And they're correlated and aligned. And hopefully ES is also aligned in terms of the direction. So I was thinking all those things. I had mentioned all of that here. I often just like dump whatever's in my brain into here. So sometimes thoughts might not be so coherent. I try to make it coherent. I apologize if it doesn't come off that way. And I'm also just trying to be respectful with when I put these cure alerts. But if I feel like something is important, I'm gonna drop it. And if it's back to back, it's back to back. It is what it is. So seeing price move higher, perfect. That played out really nicely. And yeah, once again, just explained what I was looking for. And you can see now that because price moved higher, it pulled the daily EQ up. London low is now inside of a discount. This is all you can do as a trader, is put the pieces together, create the plan, so that when the price moves in the direction that you want it to move, it's just like it's following the plan. You know what you're looking for. You're not surprised by anything, right? If something gets invalidated, it is like that's the way the cookie crumbles. But if price is going in the way that you are projecting for it to go, then you just got to keep, following those breadcrumbs. So that's what I did today. Was I put it all down. I explained some of the things I was seeing. I explained, that there's a potential daily narrative. Now, I also mentioned how daily narratives in the past, I mentioned how like the news has been completely distorting the ideas of daily narratives. I haven't found much success in the sense of seeing them work out very well. Only once again, because that war news is just like today, the price just dumped 800 points, but we didn't even know why until lunchtime. But that disrupted this, which is super clear because we have expansion in Asia, we have consolidation during London, there's most likely, given the daily narrative concept, going to see a pullback, or a retracement, I should say, back to the 50% level of the range, and then a continuation higher. That is typically what that daily narrative, the probability has typically played out like. But when you have war news creating insane amounts of volatility, it doesn't give a shit about this, right? And it doesn't give a shit about whether I believe it's going to do this or not. But the thing was, I was trying to find things to support that long position, even though it hadn't even formed yet. But I was trying to put those pieces together because that made sense. And I think that's kind of the takeaway here is we got to try to find various confluences to the position we take. So if the mandatory point of my position was I need to see London low get swept because it's the first level in the discounted range, what else can add confluence to that position that is non-mandatory? SMT comes up, internal range liquidity from the higher time frame comes up, the daily narrative comes up, the daily EQ comes up. That's 4 things already, right? So that's 4 additional pieces of confluence that I could add to the setup if it confirms, of course. And price, of course, had different plans today, right? Price just kept dumping. So if we just go to what price is currently doing to just get a view of the landscape, if we look at what happened from Asia to New York, we have a 544, almost 545 point move, literally up to the point where New York opens. Okay, that alone should tell you like what the hell's going on here, right? Like that's a big move. So to think that like price is going to move even higher than that, right? Because I talked about Asia expansion, London consolidation, New York continuation. What the hell is New York going to continue if price has already moved almost 550 points before New York has even opened? Do you get what I'm saying? Now let's flip it. Price moves up that much up to the New York Open, and then price has literally moved as of today, as of right now, the high and the low of the New York session is sitting at 1,620 points. So I think that's, alarms for the circuit breaker. I know My Fun of Futures put something out, like a post in their Discord saying, like, be careful, the 2% rule of whatnot that they have. So, you got to be careful. There's no point trying to trade anything in this situation, in my opinion. You know what I mean? All it says, bro, ES did me so bad with that 3-minute short. Yeah, I noticed you went short, and then I think you said that your stop loss got tagged break even, if I'm not mistaken. If we just go back to the 3-minute for a sec and just observe, I'm assuming it was up here, right? Was this setup? Yeah, that's rough. Was it the one that happened at market open, or was that the pre-market one? I can't remember which one you took. Sorry, man. If you can maybe let me know. Market open. So hold on. Oh, was it? Let me just hit replay. Sorry. So like, if we have market open here, this is the 3-minute. Are you talking about this short right here? This one, right? What's up, Mike? How you doing? You marked it. Okay, so it is this one. Where did you get? Oh, I guess you're showing me. Okay, let me ask you a question. Why did you move your stop loss to break even? I mean, yeah, I figured that was the 1-minute time frame. So it was like somewhere in here that you got stopped out on that wick, I'm assuming, right? somewhere in this wick, I'm assuming. But my question is, why did you move your stop loss to break even? Let's start there. And another question for everybody who's here, did anyone take a trade today besides Alice? I know Alice took a trade. Did anyone else take a trade today? And if you did, how did that work out for you today? So he says, I got in break even because NQ was close to the daily EQ and swept New York low. Was afraid from an SMT or whatever. Okay. Let me just zoom in on NQ here a little bit. So this is the setup right here in terms of the NQ side. And here's ES. So you get stopped out probably around here. So I'm assuming you're seeing bullish SMT forming here probably. Maybe that got you a little nervous. I'm assuming that's the SMT you're talking about. Maybe it's something else. Yeah, that's sweep on NQ. Yeah, I see that right here. I mean, it makes sense. I think the only thing I would say to you is whenever you're taking trades like this, I think it's important to give the trade a chance, right? And what does that mean? It means when we're looking for price to move to a draw on liquidity, like identify where that liquidity is. So if I'm looking at the 3 minute, and this is my entry right here, if I look to the left, I often talk about I want to see LRLR. I don't want to see imbalances stacked up, right? Because that creates non-singular movement or non-singular setup, excuse me. But when we look at this, the imbalances are right here, and then we have LRLR here. So to me, I would only be wanting to consider moving my stop loss to, like, say, break even, or I would be targeting TP somewhere here, if not somewhere in this area, right? You can see all that there. But there's no, clear swing points. So for me personally, even though NQ has swept this level, now granted I don't trade ES, I'm trading NQ, but let's say the roles were flipped, right? Like let's say this setup was actually on NQ and the NQ chart was ES, right? So let's say ES did that sweep, but NQ hadn't. I personally would have let the trade breathe a little bit and see how price reacts to the EQ of the IFVG range that I created. This is what I would have done personally, because if I know like NQ has swept previous daily high, now in this case it's ES of course, but like this was a clean level that we were looking for, right? I had mentioned this. ES has got previous daily high right there. And we all know previous daily high can be a very, very good level when it has not been touched in a long time. So that first touch that it has the potential to be very, very powerful. And I wasn't surprised to see that reaction from ES. So going back to kind of like the trade strategy, if you will, like I would have let it breathe. I would have at least let the EQ play out. So like if I see price starting to close above the EQ, right, and I can see NQ is maybe leading the charge, right, because that was the basis, right? Oh, there's bullish SMT, right? There's bullish SMT. But if I don't see any continued strength on ES, even though it's the technical stronger pair, I'd stay in the trade. Like, price didn't. Here's another tip for you all, because I know you said that emotions got you. Another way you can offset your emotions is just by like observing very basic concepts to the setup that you created. What does that mean? It means if this is my IFVG range, my first line of defense in terms of like my first red flag, right, of being cautious would be, has price closed back inside of the IFEG? If price does that, flag 1 comes up. What's flag 2? Has price closed back above the IFEG EQ? If it has, flag 2. And then flag 3, which is usually telling you that the trade's cooked, is if it closes back above the IFEG. Because we all know A plus IFEGs don't close back above the IFEG. So let's just go back through the flags. Flag 1, did price close back inside of the IFEG? And the answer to that is no. So until that happens, this is a logical way you can kind of keep those emotions at bay. Do you understand what I'm saying? And it's not easy to do. You got to sit through it. You got to practice this. But I've found great success by just using that kind of common sense of technical IQ and just having trust in the system that I'm trading. There was a beautiful quote I read today from Tom Hugard about, I'm going to keep probably quoting Tom Hugard for a little bit, but I found a quote of his. I might as well just read it because it's so beautiful. The patience flows from my trust in the market and in myself. I have an emotional, it's right down at the bottom here. I have an emotional connection between trust and patience. I trust the process will come if I am patient. If I am patient, I will win. Winning does not determine anything else to me. If I'm not patient, I will not win. I will do anything to win. Therefore, the trust overrides any sense of impatience that may arise in my mind, because I trust that when I miss the signal, there will be another one coming. Now, that's in regards to missing a trade. But if you look at what we just talked about with that setup and observe a couple of the sentences prior to the last one there, it relates 100% to what we're talking about, right? 100% to what we're talking about. So, where was I? Yeah. So, if I'm being patient and I'm trusting in that process, like I haven't even, there's no reason to be scared is what I'm saying. So, I won't beat this to death. Brother, emotions are part of this game. We all know this. Like, I can't tell you how many times I've made stupid decisions based off of like being panicked or having some fear, right? But you know, when it comes to trading, like we gotta trust our process and our system and the mechanics behind it, and then just start to use that logic to protect us from ourselves. So Mike said he took a trade. What did Mike take? I just gotta zoom in. That's a small picture, brother. 9:30 open. Oh man, that is a super small. Is that a super small IFEG? My God. Where was that? Let's take a look at that. Was that? Okay, hold on. Cancel this for a sec. And once again, just want to say thank you to you guys for showing up today for the stream, just hanging out with me, talking charts and stuff. Okay, so you got it right here. It looks like that's your setup. This was the setup you took right here. So your entry was on this. Your IFEG was this. This was your IFEG. So a couple things about this setup. Well, first off, congratulations. You got a win. That's amazing. That's what it's about, right? Trying to stay green on the day. And if you followed your rules, man, like that's it. That's all that matters, right? Like whatever I have to say can be additional things to think about, but if like you followed your system to the T, then I mean that's beautiful. Now you mentioned here something. You said Venom Low. I don't know what that means, but it sounds pretty cool. I don't think that's an ICT thing, is it? Or is it? Is that something new? Sorry, I apologize for my ignorance, man. Venom model. Okay, that's news to me, man. Never heard of that one. Am I living under a rock? I hope not. Okay, I'll have to look up what that means, or if someone could just kind of say like what it is. Is that like a? I mean, you said Venom, so I'm assuming this is Venom. So I'm assuming like is that like some sort of like a Judas swing idea, something like that maybe. That's a catchy thing to say though. I trade the Venom model. Like that sounds pretty boss. Um, and I was saying to Matt and some others earlier today that like there's so many different terminologies. We should just like start creating our own. Okay, so Steve didn't take a trade today. DH went long in London, short in NQ or in New York. Well, that's awesome, man. Went long in London. Double dipping in the sessions. Spaghetti says nothing worth sharing. Hopefully, nothing worth sharing means like you didn't take losses. That's the most important thing, man. EC didn't take any trades. Good for you. That's nice. I'm in the same boat as you. And I think what you just said there, nothing I liked. That is so important as a trader to be able to distinguish between like seeing that there's nothing there that you like versus seeing that there's nothing there that you like, but then still taking a stupid trade and then losing, right? And if you win on that stupid trade, that's just reinforcing bad habits that will bite you in the ass later. And I only speak from experience, of course, with that. I'm not saying you specifically, but that is what has happened to me. Oh wow. Okay, we got the ICT. Okay, this is a thing. Holy crap! No losses, but no big wins. I have some psychological issues to work through. Fair enough, man. I mean, like I said, there's no shame. There's no, don't feel guilty about it. Just like journal everything that's inside and review it when you're kind of collected, and then you'll start to unlock those secrets that are kind of holding you back a bit, because we all have them and they all come up from time to time in different situations. So I'll speak once again from experience, and I'll just say that and we'll look at this trade in a sec, but what I will say is like I often talk about when the market's on easy mode and when the market's on hard mode, and that you don't know when you're going to get which market, right? So like in the past, we've seen some easy market moves from last week, but then this week started and it's like not the case, right? This is where like if your mindset is already kind of locked in, like you're dialed in on exactly what you want to see and what you want to have play out, you know exactly what you're looking for, and you're able to separate the FOMO that comes along with watching price do what it's going to do, but it's still not meeting your trading like entry requirements. Do you know what I'm saying? So let's take a look at this. So this setup right here, did that tap into like an FVG or something? No, it did sweep some 15-minute level there, but it did. The other thing I'll note about this, so you do have SMT here, which is cool. It is after the open, so you do get a bit of a swing. If that, you mentioned the Venom thing. From my perspective, like I was waiting for price to move lower, of course, right? Like I was waiting for London low and the daily EQ to kind of push up higher. That's just my perspective. If I were to look at the IFBG though, I personally like this IFBG is 2.75 points. I'm not sure what the track record is on your end with these types of IFBGs, but it'd be interesting to see like do IFBGs that are 5 points and less work out a lot for you, or if they don't. Because for me, when I was taking IFBG setups that were like sub 5 points, losses like racked up. So for me personally, like seeing an IFBG that's sized below 5 points isn't attractive for me. but that's me, right? So that's one thing that kind of sticks out. Otherwise, you know, if you see what price is doing to the left, like there's no imbalances here, which is great. So price has literally the highs here to sweep. So the drawn liquidity is great, right? Like we can clearly see there's a potential for drawn liquidity. We got relative equal highs here, right? So that's sick. And once again, good job, man. Like I'm happy to see you winning. I'll share this dumb trade that just happened not too long ago. Okay. Took it for pennies. So that's the lunchtime trade. Okay, let's take a look at that. So that would have been probably right about, is it 12:30? Was it? I'm assuming it was this. Yeah. So you took it from here, right? Okay. Let's just see what happened here. So if we go to the hourly, did we got any levels on the hourly that work with this? Or is maybe the 4 hour? I can see one little level here. Let's go to the 4 hour quickly just to see. Yeah, so nothing on the 4 hour. Oh, that's like a gap or something there. Is that like an end dog maybe? There's just like a volume imbalance created there. Tuesday at 2 to 6, 8. So that's probably an end dog right there. That got somewhat filled. Okay, that's interesting. Don't see that too often. Let's go to the 1 minute. So on the 1 minute, you got a spike. You got another super tight small FEG right here. How many points was that? Probably. Oh my God. I said super tight, super small, and it's 10.25 points. That's how massive these candlesticks are. Oh my God. That's crazy. That is crazy. Wow. Okay, that surprised me a bit. So you have an IFEG here. It is a lunchtime IFEG. It sweeps H1 sell side liquidity. We showed that there's an end dog that was there that kind of tapped into on this wick. Obviously, this sticks out like a sore thumb, right? So what does that mean? That means like if you're, like we see that there's, so like right here is the technical entry, right? I say technical just if you're looking at it from an IFEG point of view. I personally, once again, I mean, there's many reasons why I'm not taking this, but lunchtime being the first part, which is time. Second part is like the stop loss is like way too big. Like if I were to use the swing point here at 84, just given how volatile the market's been, like 84 points is pretty big. I mean, you could use something smaller, 50, 54 points. But what I would be looking at is the drawn liquidity, right? So for me, the drawn liquidity would be this SIBI that's here and the EQ most specifically. So if I just kind of measure out to here, what I would be trying to do is get my profit from here. And that would be it. So I don't think it's necessarily like a bad trade. Like I wouldn't say it's a bad trade. I think it's just about how you kind of structure the trade. And you caught a piece of it. You caught it from around here, it looks like. Looking to take TP off these off the LRLR up here. But if I were to look at it, I would probably be eyeing something around here and the TP here, and like, depending on the stop loss placement, right? Like, you're looking at a 1 hour trade right here in a couple of minutes. But it's just that idea. Like, let's just say this happened during the kill zone, right? It becomes tricky because you really got to be careful because you're trying to catch a falling knife, right? Like price is just dying, and you're using any sort of level that's H1 or H4 at this point because there's nothing left to work with from the overnight stuff, right? Or the previous day low side of things. So you want to catch those immediate bounces, just a quick scalp. And of course, there's no telling what price is going to do, right? Like there's no knowing that there's a V-shaped recovery about to happen, right? So still, well done, man. Like you caught a piece of it, man. That's it. Yeah, you were looking at the bigger IFG, probably something up here, right? So, but I would be eyeing this. Jackbit says there's some fangs happening there. I know you don't work that much with IRLs, but 1 hour IRLs with the daily EQ is super powerful. Yeah, brother, you know, like I said, man, like I think anytime I put a trade together, like I work off of the mandatory. Oh, appreciate that, Sweaty. Spaghetti, appreciate that. Let's just talk about that for a sec. The 1 hour IRL with the DEQ. So what I really love about what you've said there is you've found two like concepts and you've put them together and you've found some success with that type of a combo, right? That is amazing, because I think as a trader, like when you're kind of starting off, like you don't understand what it means to kind of put confluences together, right? And with ICT concepts, there's so many, you know, incredible concepts that have been, obviously it's repackaged, but let's just forget about all that stuff because it is speaking to our generation. But when we look at higher time frame internal range liquidity, we know from a technical perspective how valuable those can be, right? So what that means is if we have like a foundation of the setup that you're taking, so, and I'll speak for myself once again, but like for me, if I'm looking to take a trade off of the daily EQ, okay, once price hits that level, right, that's the mandatory stuff, right? Like that level being tagged or swept, right? I don't want to see price closing or accepting too much over it, if not anything. The second part is I'm going to obviously move to higher time frames to see what other things are happening at that level. What does that mean? Is there an hourly or a 4 hourly, you know, ERL that's located there? Is there a higher time frame internal range liquidity that's there? And because if there is, what that does is it now adds more confluence to the setup mechanics, right? This is the basis of the setup. If I move to the 15-minute, what's on the 15-minute? Right? Okay, there's an internal range liquidity there. Let's go to the hourly, right? Oh, there is an hourly IFEG here, and price is already tapping into it. I'll even check the 4 hour just for the hell of it, right? It doesn't hurt, even though it probably doesn't have anything there, but I'll still look at it. So as I kind of move through the higher time frames and then I come back to the lower time frames, now I have more context to add to that setup. And then of course, you know, I'm rocking the SMT indicator. If the SMT starts to appear, now just by rolling through very basic concepts, I'm stacking them together. So that's what I really like about what you did there, is you've put the 1 hour IRL with the DEQ, right? And then if you can add like SMT to that, I mean, now you have three things going for you, right? And then you're looking for your entry function. So you've also looking at a short below the daily EQ, right? And you know, the thing with a setup like taking a short here is that you're taking a short in discount. Or sorry, I should say you're taking a short in, well, I guess you're technically taking a short in discount, right? And you should be taking that short in premium. So you'd want to be taking that short up here, because it's not to say that the short might not work. It's about probability, right? It's about probability. It's just about, if I know that there's a higher probability of shorts to work in the premium, then why would I try to take shorts in discount? And vice versa for the long, right? So you just got to put yourself into those highest probability scenarios and trust in that process. Do you know what I'm saying? Paper traders would have been wrecked. Yeah. But yeah, that was a nice H1 SSL sweep during lunchtime there, man. Often I've been noticing like we're getting some sweeps and then the setups are not very clean. They're not like what you want them to look like. The other thing too I'll talk about is like anytime we get these sweeps at higher time frame levels, I always say this to you guys, man. There's always going to be one of three types of entry models or 2 out of 3 entry function models that are going to appear. And we just see 2 of them right here, right? We got the IFVG setup, which is like a V shape right here. And the second one is the swing failure pattern, right? Where we don't, like, I wouldn't consider this a sweep because the candle closed well below this level. But this is what makes it a swing failure pattern then, right? Because you then got the lower high and then the higher low. And sometimes there's SMT on these 2 levels, right? Now, I don't know if it's not showing SMT there with ES. I wonder if there was some with YM. And no, there wasn't. So sometimes that happens, which is also helpful. But I just find it so interesting. There's always one of those 3 or 2 of the 3 kind of combinations. The third one being the unicorn, right? That CISD 2022 mentorship model style setup. So as we're watching kind of price, I mean, I think for me personally, like let's just say we were looking to take a trade today. Like it's literally at this point, are we going to sweep the underside of the daily EQ, right? So I'll just set an alert here anyways, just in case. We'll see what happens. Let me go through my notes. So we are doing this. We talked about yesterday and today. We talked about the overnight session range points. We did this. We talked about the daily EQ and the London projection and why it's important. Non-singular examples. Yeah, I mean, let me go back to my thread because I did share a perfect example of that. Okay, before I do that though, let's just quickly talk about ES and did you just say I set an order? Oh, whoops. Well, the good news is I'm on replay trading, so crisis averted. I know I already logged out of my Tradeovate accounts. I already know that, but you guys actually scared me there for a second because I was like, wait, what? That's funny. That's funny. But thanks for looking out, guys. I appreciate that, man. Can you imagine? Can you imagine? Jeez, that would have sucked if something happened there. Okay, so I just want to take a quick step back because we were talking at the start about the correlation between NQ and ES and how I think it's a really good filter to include into your trading, and I'll tell you why and why we want them correlated. So NQ, I wanted to see it sweep Asia low and it didn't. And I mentioned how when price front runs a level, like I will not enter that even though there might be the correlating sweep on ES side, right? So ES has swept London low, but NQ has, yes, it has swept London low here, but I was looking for the Asia low to line up with this level, right? So I wouldn't actually want to take a short, or sorry, take a long here until it sweeps. But if we look at the correlating asset, which is ES, what we notice is that the daily EQ is literally right in the way. And what does that mean? It means if you were to try to take some sort of a long here, and if we're looking at this from a singular versus non-singular position, this is the definition of non-singular because you have FEG stacked up to the left, which means you don't know which FEG, SIBI, price is going to react off of and potentially roll over on you with. So the ideal scenario is that you don't want to see FEG stacked up against you. You want to see LRLR stacked up against you because price is looking to take out that liquidity. And when that liquidity gets taken, it's fueling the move higher. And FEG is not fueling the leg higher. The FEG is actually slowing the momentum. Okay? So that's singular and non-singular, LR versus FVG. But if we look at the daily EQ, whenever we see this happen, right? And I mentioned this, that like if the long were to have set up with Asia low, that I would want to see ES push as far away from the daily EQ as possible. And the reason behind this is that the daily EQ acts like such a crazy support and resistance level that if I were to catch a long here and ES were to hit the daily EQ right away and reject, it's going to obviously pull NQ down with it. Here's the next image. So if you took this long here, right, you see that there is an IFVG here. It's not singular, but there is an IFVG here. But do you see what happened next? Why did NQ slow down right here and then ultimately roll over? It's simple. Because ES tapped the daily EQ and rejected off of it. And that one little filter can save you a stop loss. This was a repeatable mistake of mine for a while until it started to make sense and click. Okay? So always be mindful of where the daily EQ is located between these two assets and give the asset space to breathe if you're going for the long, right? You don't want to see, once again, you don't want to take a long on NQ if ES is literally approaching the daily EQ, because it will ruin your A plus setup. And that doesn't actually make it A plus. What would make it A plus is if, as NQ sweeps Asia low, ES is now, sweeping some other type of sell side liquidity as well. But it's a good distance away, so that at least that will not screw up your trade. And this is a great example of that. So I just wanted to share that. And the other thing I was going to talk about, let me just backtrack and make sure I haven't forgot. Oh yeah, we were talking about non-singular setups. Okay, and I just showed you that. So we kind of did talk about that. We talked about the importance there. Okay, so I did kind of cover everything I wanted to cover, which is good. But this is the slide I was looking for. Sorry, I don't mean to be all over the place. It's just sometimes things come up and it just gets me talking. So when I was looking for price to sweep these levels, right? London low, daily EQ, Asia low, hourly sell side liquidity. It's one thing to just mark the level and set the alert and wait for price to kind of tag that level. But we have to watch how like the candlesticks form as they approach those levels and as they tag those levels, because it's also equally important. Looking at how price just started to slice and dice through these levels, it's literally just stacking FVGs. So even though we could see like a V-shaped recovery or some sort of an IFVG setup, once again, you don't know which one of these FVGs, these SIBIs, price is going to hit and roll over off of. Like, you don't know. What does that mean when you don't know? It means that you are now putting yourself in a lower probability situation. And that's kind of my point here is high probability means that you have more clarity on defined levels of, drawn liquidity or price projection. And when things are like non-singular, unknown, that's just pushing you more onto the side of the lower probability. And once again, it doesn't mean price can't move 1R. It's just about perspective of understanding the difference, right? There's a line in the sand between the lower probability and the higher probability setups. And if you can stick to more of the higher probability setups in the long run, you're going to fare off so much better. Your trades are going to be cleaner. They're going to work out faster. They're going to just be more obvious. Do you understand what I mean? So this is a perfect example of non-singular. And this is like a really great example because this is exactly what I don't want to be in. No matter what price does, I don't want to be in a setup like that. The second thing I've noticed for myself personally too is time. We all know the best setups are going to happen in between, like, I know there's a time macro of like, I think it's what is it, 950 and 1010 or something like that, which is literally just the closure of the previous hourly candle and the open of the next hourly candle, if you think about it. But if I just use a time range, like 9:30 to 11 is like the best time for these trades to play out that we're looking for. And as the time moves on and on and on, we are now moving from high probability to low probability. And you have to kind of understand that even though something could be A plus and it happens at like 11:45 or 12, and it might work out, but over the long run, remember, you're looking at the long run, right? You're looking at like a trade sample size of, say, 50 trades. You're probably going to rack up more losses trading post 11 o'clock than you are going to get wins trading post 11 o'clock, in my opinion. Now, can you trade the New York PM kill zone? Of course. But once again, you're going to stack up more losses than you normally would have if you just stuck to trading 9:30 to 11. Now, you'll take less trades, but you'll have probably a better RR. You'll have a better winning rate percentage. And ultimately, that just means you're going to have more money in that account that you're building. But being able to stay disciplined to not take those trades, that's hard work. It's not easy, right? If I wasn't doing this live stream, I would have already been logged off ages ago, right? Would have been doing something else. So there's nothing wrong with just shutting it down just because of time, no matter what, right? No matter what. So another thing, I think Slick had mentioned this. He said, "What a sleeper day for such energetic price action." Honestly, I read that and I was like, the light bulb was like, I was like, ding, ding, ding. I was like, that's the most well said thing I could have attached to what was happening today, because to see price, dump as aggressively as it did, and to be sidelined because nothing worked out for me in what I was looking for, that is technically like a sleeper of a day. But the volatility is insane. Once again, I think what was that, 1,600 points or something like that? Yeah, 1,620 points. Like insane movement today. And we know why, it's the news. But it was very well said. And like I said, I try to share these things as I see them. But this war just does not look like it's going to end anytime soon. So what does this mean? It means that, yes, we're going to have unpredictable volatility, but at the same time, it just means we got to be a little bit more cautious. And this actually gives me more confidence in just taking the 1R trades, because I know 1R IFEG trades that I take personally, and the way I'm taking them, they have like a high 70% win rate. And like, if you can have a high 70% win rate taking a 1R trade, what that means is that you can potentially risk a little bit more and fall back that, every 10 trades, you might have 2 or 3 losses. Do you understand what I'm saying? So that's how my stats have kind of played out when I look at it, in terms of like that monthly view. And I would, recommend that, you do the same thing. Take a look at, your stats. Like we're at the beginning of June here. So like, if you haven't reviewed your May journal, like go back and review your May journal, right? See what you did right, see what you did wrong. If you have trades that you took that were mistakes that led to a win or a loss, I challenge you to remove those, like duplicate your journal and then remove those trades. So you only have A+ trades in your journal. I challenge you to do this exercise. Only keep the A+ trades that you took on there. Even if the A+ trade was a loser, that's fine. You keep it in there. But take out all the other bullshit and look at what the results look like. Because I started doing this, and honest to God, I was just like, holy moly. Like, I should have never broken rules or succumbed to FOMO in those stupid situations, because, like, yes, there's less trades taken, but my win rate was insane, which means the amount of money that could have been in that account would have been insane had I just trusted that process. And it comes back to that quote, right here. The patience flows from my trust in the market and in myself, right? I trust the process will come if I'm patient. And if I'm patient, I will win. So, beautiful quote, man. But I challenge you to do this and see what your journal looks like. Go back through the months and do this. Duplicate it. If you're on Notion, just duplicate your journal and then delete all those, like I said, delete all the trades that you made mistakes on or that you broke rules, whether it's a win or a loss. And then look and see what your journal looks like. Because that's like the true test on the model you're trading and how you're trading. And how you're showing up to trade. So, Sweaty Spaghetti says, I need to do the 20-day challenge. Yes, sir, you do, man. I think everybody needs to. It doesn't matter how profitable you are. Like, I think doing it is going to unlock massive things for anyone. Because we all have, like, weaknesses. And you could go on, like, massive win streaks, but you still have a weakness somewhere. And there's always going to be a weakness. And that's okay, because we're not perfect, right? We got to accept that. But the 20-day challenge thing or the 20 trade challenge thing, all that it does is it exposes that weakness when the weakness finally decides to show up and you succumb to it. You'll know. You'll know. That's okay, brother. We get the point. And there you go. He shared it. Thanks for doing that. Yeah, I honestly, I challenge all of you to do this. And there's no judgment, there's no guilt, there's no embarrassment here. No one's pointing anyone out. Like, you're doing this for yourself. Like, I'm there to support you, as I'm sure others are, but this is a you versus you test. And if you feel like you're up for the challenge, like, then put yourself up to the challenge. Do it. Do it. It's super, super healthy. I've done it now. I've passed it once. I was about to pass it again. I was at my 19th trade. And it's not about wins or losses. It's about, did I follow the rules to the system? And on my 20th trade, I took a loss. And on review, I realized I broke a rule. And now I'm back. I'm back to the beginning. But that's okay. Because I looked at that loss that I took and I realized what I did wrong. And then I understood the emotions that went behind that loss. That's the weakness, man. It came out. It took 20 trades for that weakness to come out and be exposed, but it came out. And that's kind of why I was saying what I was saying earlier, because you don't know when it's going to show up. And it's not about me passing a 20 trade challenge. It's not about the passing. It's about, like, everything in between. So, like, when we first started the challenge, I remember I took 3 trades or 2 trades, and then I broke a rule, started back at 1. And then I managed to get to 20. And then I took a break, and then I restarted it again, got to 19, like I just said, took the 20th trade, broke a rule, back to 1. And I think I'm on trade number 3 now. I think I just finished the 3rd trade last week, and this week I got no trades. So, like I said, you will never know what that weakness is until you take a challenge like this and put yourself through the grind. And part of this challenge is about having a routine. Like, if you don't have any routine, if you don't have any sort of discipline, this challenge is going to basically help you put that in place and force you to, like, move in that direction and rewire your thinking process. And it's going to suck at first. I guarantee you it's going to suck at first if you've not done it. But just like anything in life, after the first week or so, like, you're already going to start seeing huge differences. And I can say this with, like, the utmost confidence, because I know other people have also started to like see the fruits of their labor. So it's not just me saying it; it's other people too. So let's go back to the notes. So we covered everything there. We talked about. I think the last thing I want to talk about is just like, once again, just the mindset stuff, right? Like, today I watched the price move insanely aggressive, and I was still sidelined. And it's not an easy thing to do. I kind of keep hammering on this because it's so important. This is where people blow their accounts, is on days like today. And I guess I'll just end with this one last quote here. Unless anyone has questions, we can go through that. But the other quote here says, and it's right here: "My knowledge of technical analysis is average at best. My knowledge of myself is what sets me apart." The reason I'm bringing this up is because as traders, we're off, like, especially if we're unsuccessful traders, right, or unprofitable traders, you keep thinking you have to learn something else, right? Maybe it's the Venom model. Maybe it's, the PSP model. Maybe it's GXT. Maybe it's the Unicorn. Maybe it's IFVGs. Maybe it's OTE. Or maybe it's some other type of model that I don't even know about, right? Forever model, Trinity model. There's so many different concepts and models that are out there floating around. Maybe it's a VWAP model with IB, things like that. The thing is, like, you don't need to know everything. It's not going to help you. Sure, can it increase your trading IQ? 100% it can, right? It can make you more technically prowess. But that doesn't mean you're profitable. And it doesn't mean you're going to be successful. It just means that you're smart. But as we know in this world, the smartest people sometimes don't make much money. And we look and we see people who know nothing making a shitload of money. We're like, that person is an idiot. Like, how are they making that much money? It has nothing to do with the technical. It has everything to do with just them knowing themselves and believing in themselves, understanding themselves. So I'll put it to you like that. Anyone have any other questions? If you do, drop it in the chat. I really appreciate it. One last thing I'll talk about is this, which is basically what just tags on to what we're talking about, and we'll end here. But what separates the 10% from the 90%, right? Everyone jumps to this. Nobody really jumps to this. And this is why a lot of times in these live streams I talk about a lot of this stuff too, because it's not just about the mechanics of the IFEG model. Like, I really want to drive this home. Like, you got to spend time working on your psychology. If you do not have The Best Loser Wins, that book, like, you have to buy that book. You have to. It's like a textbook in a university course. You have to have the textbook in order to be in that course. It's the same thing, except the price tag on that book is like less than $20. So, like, get yourself a copy of that book, take it with you wherever you go, and start to improve your mindset. This infographic is saying, and I think it's coming from The Best Loser Wins. That's where I got it from. But, like, only 10% are developing their psychology. And if you think about, like, the stats, in terms of how many people actually get funded, like go from eval to funded, it is like such a small number of people. And then if you look at the amount of people who are funded that actually get paid out, it is even smaller. It's like so if we look at the whole picture, there's like a slim fraction percentage of people who are actually profitable and taking payouts. Even though it looks like there's a lot of people doing it, there's so many people you don't even know that are blowing accounts left, right, and center, because no one's showing you that. And I noticed that with these discords with like My Funded Futures or Lucid or Tradeify or Alpha, is that they all show people taking payouts, right? There's like a thread of people who take payouts, and they just keep showing you all the payouts. But like, what about all the people that blow accounts? Where are those? Where's that bot? I swear to God, if they showed that, your whole perspective would change, because you'd see it. You wouldn't just hear me talk about it, you'd see it. So to get to that point, you got to do the hard work. And all I can do is talk to you about it and reinforce these ideas to you twice a week and in my thread by message. But it's up to you to figure that out. I can show you things that have worked for me that I love to share with everybody, like the 20 trade challenge, like journaling. And I can share like documents with you about, you know, monthly performance reviews and things you can take. And it's not to say you have to do everything, but like take pieces of these things. Take time for yourself to do the work, right? Especially if you've got a handle on the technical. Bobby says, ever since joining this group, I've learned a lot about trading, but I've learned even more about myself. That's how you know you're in the right group, right? Now, not every group is for every single person, right? But if you're in a group and you're getting those types of like achievements, like you're in the right place. And I appreciate you. Thanks, Spaghetti. Appreciate that, man. So, once again, I really appreciate everyone being here today on Tuesday. I had to adjust my schedule, my IRL schedule. Basically, I had to change. So that's why I'm doing Tuesday and Thursday this week instead of Monday and Friday. So I'll be back on Thursday at 1 p.m. I've updated the events section, so it'll say it. But obviously, you know, I'm gonna obviously blast messages and stuff like that. But nonetheless, I really appreciate being here with me on a Tuesday. Just to take a look at the price again. Yeah, I mean, did they halt the price or what happened here? Looks like it's halted. Is it halted? Oh no, it's still moving. It's just not showing here for some reason. So, yeah, not much going on here. We'll be back, like I said, Thursday. I'm on replay. Jeez, that would be it. Thanks. Okay, so price is still moving higher up here. Yeah, but we'll be back on Thursday once again, and I'll get the recording out for everybody. And if anyone ever has any sort of issues, things that are troubling them with trading, if you feel stuck, if you're listening to this, you don't talk much, but you need help, like just drop me a DM. You might have to add me as a friend first. I will never message you first unless we're friends. So just get that out of the way. But like my DM is open, man. Like hit me up. I will always be there to chat with you. And anyone that's already done this and hit me up and talk to me, you already know like the type of responses you're gonna get. You're not gonna get like a single line response from me. Like I'll be there with you to talk about whatever you want in terms of that trading stuff and help you out to a point where you feel comfortable about where, you know, like maybe what your next step could be. And I'm not perfect either, but I'm just someone who wants to help. Thanks, Spaghetti. I appreciate that. I really appreciate the warm words, guys. And I really appreciate your time once again. I hope you have an amazing rest of your day. God bless you. Peace out.